at a couple of the headlines. Gordon Haskett, analyst Don Bilson, weighed in on the short squeeze that is ongoing on GameStop. This is 14th of January. And whilst they said it's not the greatest of all time of short squeezes, which goes to the one Porsche engineered at Volkswagen in 2008, nevertheless, the GME one is vicious. Bilson said that he doesn't know what started the ball rolling on the squeeze. He said that Bloomberg data shows that there are almost as many shares sold short as there are shares outstanding. Well, that's what a short squeeze shows us, is that when you get a massive increase in the short float, obviously what's happening is a big problem, isn't it? If you've got a massive increase in the short float, these shares are being borrowed. They don't actually potentially, you're borrowing a share to sell it short, right? Everybody knows what a short sell is, right, on stocks. Anyway, finally, the analyst highlights that Chewy co-founder Ryan Cohen parlayed his 13% stake into a settlement that gives him 3 seats on a 9-person board. In effect, he wants to see GME become another Chewy. We were involved in the Chewy trade a while ago. Do you remember that trade, Kim? Chewy? We were involved in the Chewy trade before it even happened. Now, when you look at what happened on January the 15th, shares in GameStop were surging on a short squeeze. Insider selling from the director. This guy's obviously a little bit pissed off, isn't he? He sold 95% of his holdings between $20 and $31. Now, obviously, he may have replaced that holding with call options. After the sale, Wolf owns 91,000 shares indirectly through Hestia Capital and owns 50,000 shares directly and some shares with his wife. So he sold 95% of his holding between $20 and $30 before the price obviously ramped up in the last phase of activity to a high print price this morning, or a high print price of yesterday, of $475. $475. Remember, this was out in January the 14th and January the 15th. At that stage, the share was trading at $40 a share. So this guy got rid of his shares at $20, which is $380 cheaper than he could have got on that high price. So this guy's obviously just missed out on a, imagine it, guys, 945,000 shares that if he didn't cover it, if he didn't get a reversal on that, and it traded $400, he's thrown away in a period of 10 days. He's thrown away nearly $400 million of opportunity. He's thrown away $400 million of opportunity, guys, by getting rid of his shares at that point. That's a kicker, isn't it? That's a kicker. Hindsight's a wonderful thing, guys. It can cause you to be, destroyed at times, can't it? It can cause you to be destroyed at times, but you know, it can be something that you've got to just make sure you don't suffer from that regret about taking a trade out at certain points in the day or certain points. He obviously still made an absolute fortune on the trade. So you've got to remember that there's no regrets in trading. You've just got to get yourself moving again, guys. That's all you can ever do. Get yourself moving again.